Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Disney is bouncing back a little bit this week after announcing an agreement with Charter to get the company's channels back for Charter's 15 million customers. This is a step in the right direction for keeping at least some cash flow from the cable business, but really the future, even with this deal, is streaming. What Disney gave up, if you can look at it that way, is giving away the ad-supported version of Disney Plus to all of Charter's customers, and then ESPN Plus and potentially ESPN over the top when that arrives to a premium tier or a sports-related tier within Charter. Also gave Charter the ability to resell their streaming services. But I think this really lays the groundwork for the future, and there are a few predictions that I have for Disney going forward that could actually help the stock be an outperformer in the future. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing. I got a link to that in the show notes, and I've been covering Disney a lot in that space. The first prediction is that I think the deal that Disney struck with Charter is going to be replicated across the cable industry. Not necessarily all the details of giving away Disney Plus ad supported and ESPN Plus to certain tiers, but the fact that Charter is going to be a wholesaler of Disney's streaming services. What Disney needs to do to try to get its numbers up is have a bunch of partners selling its content. What is more natural for that than the cable companies who are providing broadband for tens of millions of customers? So as the cable business has transitioned from making most of its money off of cable TV to making most of its money off of broadband, they can potentially add a little bit more margin by selling something like Disney Plus, ESPN Plus, the Hulu package, all of these packages that Disney is putting together and taking a maybe 20 or 30% cut. We don't know exactly what that wholesale discount is, but they're going to take a cut of the business that they're selling for Disney. The advantage for Disney is they get to build scale and they get to keep 100% of the money from advertising. That I think is going to ultimately be a much more lucrative business than just selling subscriptions for these streaming services. We've seen the price for no ad tiers go up and the ad tiers stay the same. And Bob Iger has explicitly said we actually want to push customers to those ad supported tiers. So I think that's going to be a trend, is that the cable companies and the broadband companies are going to become wholesalers for Disney's streaming services, and the goal there is to just get more people in the door in those streaming services. My second prediction is along the same lines, and that is that there's going to be new partners in broadband. For example, I have been using Verizon's 5G fixed wireless broadband for a little over a year now. Verizon, T-Mobile, and AT&T are all partners that Disney can work with to bundle with their broadband services. And the advantage for those companies is any broadband is actually an incremental add to their revenue. So they may even be willing to subsidize some of these streaming services if they just get these customers. Anybody who's paying $25, $30 a month for broadband is a customer they probably didn't have before. So it's a win-win for these telecommunication companies and the streaming services. On top of that, some of these companies have pretty big fiber businesses, Verizon and AT&T in particular, so they could bundle with those fiber services. I think that is going to be another growth trajectory. So the theme here in these two things is actually getting more distribution for these streaming services. And especially as ESPN starts to go over the top, that's going to be really critical for Disney and ESPN to grow that business and build out the ad-supported tier there. The final thing is on the content side, and really the number one content piece that's coming up in the next year is the NBA rights deal. Now, typically what the NBA has done is spread its rights across a number of different companies, particularly ESPN and TNT. Those are the two biggest names. But then they also had a lot of regional networks that individual teams generated a lot of revenue from. Now, those regional networks, a lot of those went bankrupt when Diamond Sports went bankrupt. And I think as we look to the future, with the geographic region doesn't actually make sense in the world of the internet. So it makes more sense to put more of that content onto one platform and allow people to watch any game at any time. The natural company to distribute that content, the way things are playing out, is ESPN. So this could actually be an opportunity for ESPN to offer all of the NBA's games to its streaming services. Maybe that's a new pricing tier. Maybe there's different access and different price points. But I think that's a potentially milestone deal. And the thing that I'm really looking for is, how is something like that structured? The risk for Disney is if you sign a massive 5, 6, $7 billion per year deal with the NBA and you can't make it up in revenue, you really put your finances in a very tough position. So would the NBA be interested in something like a revenue sharing deal? So a little bit more like a Spotify model. I think that could potentially provide the NBA with greater upside and reduce the downside risk for ESPN and Disney. Maybe there's a combination of those two things, like milestone payments if there's a certain number of people or a certain number of advertising revenue that is generated from NBA games. But I think as ESPN has really tried to stake out itself as a leader in sports and sports streaming, and that is probably going to be the centerpiece of a future bundle, they're going to have content to put on that. And I think the NBA is a natural place for that. They've got F1 already. Add the NBA into that and dozens of games per week. That could be extremely attractive to all kinds of sports fans. So that's 3 predictions. 2 of those lie on the distribution side, but the other important piece for Disney and ESPN is the content side. They have to have content people want. And I think the NBA is the next question to answer for them. But what do you think about the future of Disney, especially after this charter deal was reached? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.